Okay, so we are starting the next chapter today, which is chapter number 14. This is a very straightforward chapter, considering we have studied a similar chapter like this yesterday as well, which was bank reconciliation. So our basics are basically made in that. The grip is made. Only we have to change the concept, change the sides, change the accounts, which have to be reconciled. And this chapter will be fully done in that case. Okay. So this is chapter number 14, which is control account reconciliation. So let's start. Again, we will study the theoretical part from this chapter. It's a very small chapter, but mostly things we will be doing on the notes like we just did in every class before. Okay. First, let's
Okay.
understand that what control accounts actually are. Okay. So control accounts are basically general ledger accounts. So general ledger means simple T accounts that we have studied in the basic chapter 2. So control accounts are T accounts that summarize a large number of transactions. As such, they are part of the double entry system. They are used to prove the accuracy of the ledger accounting system. They are mainly used with regards to receivables and payable balances. So for control accounts, we have two words. One word is known as payable ledger control account. So one account is made for payables and second account is made for receivables. Okay, so this is the concept. Payables and receivables, they both have separate control accounts, and we will be studying the formats just like we studied the formats yesterday for bank statement and cash book. They also have their individual T accounts over here. Now, the next thing that he has discussed over here, you can see over here that these things we have already studied in much detail. The purchase entry, the purchase return entry, right? Everything. So first of all, you can see the sales entries being made over here. So whenever a company transfers the daily total of sales book to the journal ledger, so this is the sales day book, the book of prime entry that we discussed in the start. There were 7 books of prime entry. So what happens is that whenever a transaction takes place, it's entered in the day book, and if it is a sales, obviously it will be entered in the sales day book. Now the company cannot obviously keep the transactions in the day book forever. They have to, move on and transfer it to the double entry, then make a T account, then, transfer to the trial balance, and then make financial statements. So this is one step of that procedure that we studied as well before. So this is the entry, as you know before as well, that whenever we are selling something on credit, it's the money we have not received right now. So what entry we do is debit receivables, credit sales. But over here, the word uses debit receivables ledger control account. Okay. So in simple words, if I explain control accounts are in simple words known as total accounts. These are accounts which contain total values, right? Because obviously every business, for example, there is a business known as ABC company. So ABC company might have different kind of suppliers as well and customers as well. They don't have one customer or two customers. They may have hundred or thousands of customers and suppliers as well, right? So these control accounts make it easy for the bookkeeper. It makes it easy for the accountant to basically derive or grab the total amounts in that case. So that we don't have to go into individual T accounts and then take individual balances, then open the calculator, then enter the values, right? So control account makes it simple to basically calculate the total values. So you have to remember that control word over here means total accounts. And why is it named control over here? Because again, it helps the business achieve the reconciliation that we are going to study in this chapter. We have to reconcile two accounts. So that's why these accounts are known as control accounts, so that the source document is controlled, is compared with these kind of accounts, which are control accounts. So control is basically derived from these kind of accounts. Okay. So these are known as total accounts, the accounts in which total values are written out. Okay, so next up over here, you can see that there is a purchase entry as well. And as I told you above, that for receivables, we also maintain control accounts, and for payables, we also maintain a control account. Separate is made for each of them. So for the purchases, what will be the entry? Debit purchase and credit payables ledger control account. Exactly the same entry we have studied before. The only difference is that when we studied the purchase and credit sales entry before, it was just simple receivables word and payables word. These three words are added in between over here. You can see ledger control account and control account word. I already explained it to you that this makes it easy for the business to reconcile and basically have control on transactions. to know which transactions are, more than due, which are transactions are late, so which customers have still not paid us. So it all helps us in that. Okay. Now, at the same time, most businesses will maintain what is referred to as a memorandum. I'll explain when I'll go to these notes as well. When I'll start making the formats, I'll explain this thing once again as well, that what is the difference between memorandum accounts and control accounts. These two are separate things. Okay. So this is a separate list of individual receivable and payable amounts due from each customer and to each supplier. So these are the two accounts that we have to reconcile. Now, if I shortly go on to the notes, the topic that we are studying is control account reconciliation. So, in easier terms, if I summarize this, you remember from the yesterday's topic, the bank reconciliation, we were also reconciling two accounts, but that was a separate concept. In here, we are also reconciling two accounts, and those two accounts are named, as I'm writing over here, control account, and secondly, individual accounts. Okay, so these two accounts are always reconciled with each other, because we need to know that individual accounts need to have the same balance. The closing balance of these two should agree at every point, right? Let's say there were like 5 customers. Right now I'm talking about the receivables. Okay, so these are receivables. Let's assume that we have 5 customers over here, and let's name them as well: Mr. A, Mr. B, then Mr. C, Mr. E, and Mr. D. Okay, so these are the 5 customers that we have. And what happens is that the total of each amount that they have to give me is, let's say, 10,000. This is a cumulative balance. So that means this is the total amount that they have to give me. And this amount will be written in which account? In the control account. Because I just told you that control account contains the total values. Now let's see, out of this 10,000, let's say Mr. A owed us 2,000. Mr. C owed us, let's say, 3,000, right? Mr. D, let's say, owed us 500. So you can see these individual balances out of this total amount. These will be written in each of the individual customer account: Mr. A, Mr. B, Mr. C. So obviously these two closing balances should always agree, because if they don't agree, then customers and suppliers will always have a dispute with us that you have to pay us this amount. In our accounts, it's showing that you have to pay us more amount, right? So that both accounts should not agree, and that's why obviously the relations between customer and supplier will deteriorate, obviously, right? So these two accounts, in short, should agree, and their closing balance should be equal at one point. Again, if I write the equation, the same equation as yesterday, we may write it as control account closing balance should be equal to the list of balance closing balance. So these individual accounts which I've written over here, in some cases it's called, in many cases it's actually called the list of balances, LOB, list of balances. Let me write the full form as well: list of balances. And that makes me basically explain you one more concept over here that we just studied in the study text over here in this paragraph, which is the difference between two accounts. One is called memorandum accounts, and second account that we studied is a simple control account. Okay, so memorandum account, in easier words, it's the second word for individual account. Always remember, when there is a word for memorandum, you should understand it as an individual account. You can call it individual accounts as well of customer supplier. You can call it list of balances as well. And the third word is used over here. In this case, we're talking about receivables, right? Not payables. So in this case, it may be called receivable ledger, just ledger, not control account, just receivable ledger. This point is also written in the study text. I'll show you. It's written over here in this note. Okay. First, let's complete this and let's then move forward. So are you following me till here? Is it clear till
yes.
Here? Okay, that's great. Yeah. That's great. So control account is the second word, and this we have already discussed over here. This is the total accounts. These contains the total value, and these are made for both payables as well and receivables as well. Okay, so this is the difference between memorandum and control account. All right, let's move further.
Memorandum is just for receivable.
No, it can be for both, for payables as well.
Okay.
Yeah, it's for both. Okay, because in this chapter we are studying both aspects, for payables as well,
Okay.
for purchase as well, and sales as well.
Okay.
Okay, and control, obviously this is for receivables as well and payables as well. Okay, now let's read further from here. So this simple list of balances is used as a record so that companies know how much each customer is due to pay and how much they are due to pay each supplier. Okay, so you can see that this is the same explanation that I just explained in the notes, that what are list of balances, these are individual accounts. In other words, they can be called memorandum accounts as well. So we have to confirm them from the control accounts, and these contains each customer or each supplier record. These are not the total ones. List of balances contain only the separate amounts of each customer. Okay, now a key control operated by a business is to compare the total balance on the control account at the end of the period with the total of all the separate memorandum balances. So same thing we studied just now, and this process is known as control account reconciliation. So this is the proper motive of this chapter. We have to
Yeah.
compare two accounts, which are namely individual accounts and control accounts.
Okay.
Okay, now over here in the note as well, if we revisit this again, it's the same thing written over here. You can see the memorandum balances. Memorandum, remember, these are the individual accounts. Okay, memorandum balances are often confusingly referred to as the receivable ledger and payables ledger. The same thing that I've written over here. You can see memorandum is known as receivable ledger as well and payable ledger as well. So if in the exam question or if in the exam kit question, it's called the balance in receivable ledger. If the word receivables or payable ledger is used, not the full word, not the control account, then this means that this is the individual account. Many students do this mistake, that they understand this payables ledger and receivables ledger as a control account, because they say, oh yes, this is ledger, right? So this may be control account, but that's wrong. This ledger is just simply because ledger basically means, ledger literally means T account, right? So any kind of T account which contains individual balances is known as memorandum accounts. Okay, so don't
Okay.
get these mixed up with the control accounts in the main general ledger. So these two
Okay.
accounts are different over here. Now let's move on to
Mhm.
the second thing over here. Just like in the last chapter in the bank reconciliation as well. So this control account reconciliation also has some
So if
formats.
there is, sorry, a question,
Yeah, yeah.
the payable ledger and receivable ledger are memorandum accounts.
Mm-hmm.
Is true or false? True.
It's true. It's true. Yes, it's true. Because receivable,
Okay.
if the word only ledger is written, right? If it's a payable ledger or receivable ledger, not the full word, not control, not the receivable ledger control account, then yes, it's a memorandum. If the word only used is ledger. But if it is written like, let's say, receivable ledger control account, yes, then this is a control account, because the word over here is control account. It's used over here. So these will be the total accounts. But if it is only ledger,
Okay.
then it's an individual memorandum account.
Mm-hmm.
Okay. Now let's study the formats over here. So first of all, we have the format for the receivables ledger control account. I'm writing the short form over here. And this is the payable ledger control account. Okay,
Mm-hmm.
so first let's discuss receivable. It is very much similar to that current asset that we have already studied. As you know, receivables, we are waiting for the cash, right? So it is a current assets. It's the asset for the company. So if it is an asset, it will be treated as a group one item,
Mm-hmm.
of the T accounts. So for group one, we always did opening balance on the debit side because it's an asset, right? And the closing balance will be over here. This is always the treatment for receivables. Okay, now let me write all the contents over here. So all the credit sales will come on this side, because the entry you already know for this, we do credit sales and debit receivable. This is the entry, right? So credit sales, only the credit sales are written in this receivables account. Okay, if in the question, always remember this important point, if in the question it says that, let's say, total receivables or let's say total sales are 50,000, right? And 10% of these are cash sales, then you have to simply, what you have to do is that deduct 10% from this. Just take out 10, what is it, 10%, 5,000, right? So just take out 5,000 from this. So effectively only the credit sales will be how much? 45,000. Because always remember, receivables does not contain cash. Receivables basically means that we are selling the goods, we are not receiving the cash right now. So in receivable account, only credit sales will come, cash sales will never come. Okay. Same is the case with payables as well. In payables as well, only credit purchase will come, not cash purchase. Okay. So this
Okay.
was one important point. Now credit sales are written over here. Then on this side, most things are on the credit side. First of all, we have cash received from the customers. So cash received basically reduces the receivables, right? Because receivables means we are waiting for the cash, and now the cash is received, then the cycle is finished. We just finish off the receivables. We do credit
Yeah.
receivables, debit cash, right? So
Mm-hmm.
cash received is over here. After that, we've got discount allowed that we studied in the settlement discount. Discount allowed.
Yeah.
So discount allowed also reduces the receivable, because receivable only is the amount after the discount, right? So discount makes it decrease. Then after that, there is a word that I'm writing over here. I'll explain it in just a while. It is known as contra. This is basically, this word is derived from contradicting entry, but I'll explain it in just a while. This is there in receivables as
Yeah.
well and payables as well.
I think you already explained that to me.
Yeah, yeah,
Okay.
exactly. Because we studied the normal receivable chapter a while ago,
Yeah.
but many of the things are repeated over here as well. Okay. Now, apart from that, what we have over here is that, let's say, yeah, one more thing, refunds. No, sorry. Over here, sales return, it's the same meaning as refund. So sales return are written on this side, because sales are written on the debit side and sales return will be the opposite for that, right? So sales return originally gets debit sales return, and credit we do receivables. And always remember, this should be only the credit ones, not the cash ones. Okay. And finally, yeah, one more thing over here, which is bad debts. Bad debts chapter we've already studied, the allowance and bad debts. So this is that one, that whenever a customer goes away, just runs away without doing the payment, he has actually, the goods have been delivered to him, but payment has still not been received, like 1 or 2 years have passed. So this is known as bad debts. And you remember, for bad debts, the entry that we did is debit bad debt, credit receivables. So in the receivables, you can see it's being credit over here. So many of the things are very simple and very much relatable to the receivables and payables chapter. We have revisited it before as well. Okay. But the only difference is that this is reconciliation. We have to compare the control account and the individual account. Okay.
Yeah,
So
but
this,
on the book there is, on the debit side of the receivables, there is like bank dishonored checks and refunds of credit balances.
yeah, these balances, actually what happens is that, let me explain these as well. These are not much entered into the control account, because I've never seen such questions demanding these kind of information, but let's study these as well. So bank dishonored checks is the same concept as yesterday, you remember. Now what happens is actually that, when over here we talking about receivables, remember. Okay. So receivables means that we're talking about receiving payment from the customer. Now, if the customer had paid us, right, what entry we did made? We debit the cash. We were very happy. Customer has paid, and we credit the receivables. Right? It's a very simple concept. So we actually have written the cash received. You can see over here, the bank. It's written over here, the cash that is being received. We have credited it with the receivable account, but now the check has been dishonored. We received the bad news just after 10 minutes that cash is not being received to us. So we finish the cash, we reverse it from the cash account, and what we do is we debit the receivable. That means we just let it remain in the receivable account, because cash is not yet received to us. Right. So the reason I skipped these two is that we have already studied in the last chapter as well, the bank reconciliation. And most of the things will be asked of these nature: cash received, discount allowed, credit sales, sales return, right? These things I've seen very much in rare situation that these two things are asked, right? And if there is refunds, obviously what is the entry that we make? We do credit bank, and debit we do receivables. Okay. So refunds basically means that we have to reverse the receivables that what happened is that sales return have happened, right? So for sales return, what happens is that customers return us the goods, we receive it back, we have to give them back the payment. So maybe it increases their receivable again. So all the refunds, let me write it over here as well. All the refunds are written on this side, on debit side. But there is very little chance that this will be asked by the examiner. Okay, so this is receivable account. Now let's jump on to the payables account as well. It's very simple. Okay, so for payables, as you know, payable is a liability and liability is accounted for as a group 2 item, right? So liability has an opening balance on the credit side over here and closing balance on the debit side over here. Now, the credit purchases are written over here. Again, remember only the credit purchase, not the cash one. So purchases are over here. Now, cash paid to the suppliers, this reduces the payables, right? Because it's not a payable anymore, it's paid right now. So cash paid reduces the payable. That's why it's written on the debit side. By the way, this is the minus side, this is the plus side, and for this was the addition side, this was the minus side. Okay, now cash paid, apart from that, we have got discounts received. Discounts received also reduce the payables, right? And after that, again, we have got the contra entry, but on this side, on this account, it's on the debit side. I'll explain in just a while again that what this means. After contra, we've got refunds. Let's see what else is written over here in the payables account. Credit purchase, yeah, refunds are on the other side over here. Because in this case, you see, we are the customers, right? So if we are the customers, we will receive refunds. So our bank will be debited, right? So what will be the entry? Debit bank or cash and credit the payables. This will be the entry, right? And what else do we have over here? Yeah, purchase return. One more thing. Purchase returns. So these two are separate things, purchase returns and refunds, because refund is actually when you receive back the cash, right? And returns is actually when just the payable is reduced, no cash transaction occurs. Okay, so this was receivables ledger control account and this was the payables ledger control account. This is the format, and I'll send you both of these notes of this as well and of yesterday's lecture as well, the bank reconciliation today after the lecture. Okay, so is it clear till here? Have you understood it?
Yes.
Okay, great. Now let's do a small example from the study text and let's see if any other concept is remaining. Yeah, one more thing for contra entry, let me explain over here. So what happens in contra entry is that always remember when your receivable is also your supplier. So in this case, your contra entry occurs. And let me write one more thing over here, or vice versa. So this means this can be in the opposite way as well. When your receivable is also your supplier, or in other words, your supplier is also your receivable. So let's say that if you have a supplier, you have some balance to owe to him, right? You have to pay him. You don't have to receive anything from him, obviously. But in some case, your supplier also purchase something from you, from your business, because he might know that you purchase, you make something, you manufacture something, and that is of very much use to him, right? So in this case, he also became our customer as well. Now we will demand payment from him as well. So in this case, receivable is also a supplier, or in the other words, supplier is also a receivable. So that's why the treatment for this is that we have to eliminate both accounts, which is receivables as well and payables as well. Okay, so this is the meaning of contra. We have to eliminate both balances. This is the treatment, that we have to finish the balance from receivables and we have to finish it from payables as well. Okay, this is the explanation for contra, and rest of the other things I've already explained. So I hope these two T accounts are clear. Again, one more thing over here. Always remember that if there is an error, in, yeah, 1 second. If there is error in purchase day book, one thing let me explain over here. Always remember that purchase day book I'm writing two words over here. One is purchase daybook and one is sales daybook, because these two are the source document from where we'll pick up the information for both receivables account and payables account, right? So what actually happens is that for purchase daybook, always remember this is always connected with the payables ledger control account, because this is a purchase, right? So for payables ledger control account, the balances will take from where? From the purchase daybook. And similarly, the sales daybook is connected with, this is connected with the receivables ledger control account, because obviously it's sales, right? So sales daybook only contain the credit sales, as you remember from the day one as well. So the receivables ledger control account will contain all the information using the sales daybook. So if in the question you might encounter some errors as well, that this error has been made, let's say in the purchase daybook, right? So if any mistake or error is done in this account, this will directly hit which account? Payables ledger control account, because we would know that if there is an error in the daybook, this will have affected the control account. So the correcting entry will be to which account? Payables ledger control account. Okay. So over here I'm writing the description. So error in the purchase daybook will be corrected in the payables ledger control account. Payables ledger control account. Okay. And secondly, the second note is error in sales daybook. Error in sales daybook will be corrected. Oh, sorry. Will be corrected in the receivables ledger control account. Okay. So these two notes, if you understand them, if you understand them fully, obviously we'll do the questions. You'll hopefully understand these two things. So if you understand these ones, you can easily do any kind of question that is asked to you from either the examiner or in the exam kit.
Okay.
Okay. Now let's see what else is left. So over here we'll do one example as well from this study text, and just one thing I need to make clear. You can see that this is a duplicate account over here as well. So over here it's telling preparing a control account reconciliation. This is exactly the same thing that we studied over here. What it has done is that it has made the same receivables ledger control account and payable ledger control account, and it has just simply, this actually in my mind this does not make sense, that it has just written adjustment for error over here and adjustment for error over here. What we actually do is that originally we have made this account for correcting errors, right? So if something is not available, let's say if examiner says that all of the things are available, cash received is not written, so we will correct it on credit side, right? So I don't think there is any purpose of making this account, because these two accounts we are making for actually correcting the errors, right? So it basically means the same thing. Wherever the error exists, either on the debit side, either on the credit side, we have to adjust it. And how will we adjust it? If we remember correctly, if we have memorized these two accounts, if we have understood these two formats, we will be easily be able to correct the errors over here. Okay, now let's do one example. Let me see over here. Yeah, let's read these points as well first. Let's just ignore this one, because this is another method of doing reconciliation. This I would not recommend, because it's very much confusing. Because we, from the start, we are making the grip. From the start, we're making the habit of making T accounts, right? The ledger accounts. From the start, we're not practicing the minus and plus. And actually, as well, in practical life as well, the T accounts are more, more precise, and more amount of mistakes are avoided over here. So if you study this method which is given over here, the adjustment of error plus minus, this will be very confusing. Okay, so we'll adjust every kind of error in these two accounts. Now let's read these points as well. The examiner will provide details of the errors. So any kind of error that has happened, examiner will provide the details in the question fully, in 100%. Okay. Now you must decide for each whether correction is required in control account or the individual list of balances, or both. And how will we know this? I've explained you 2 points over here. You can see here, error in purchase day book will be corrected in PLCA, and errors in sales day book will be corrected in receivables ledger control account. And one more thing as well, that any kind of the thing that we studied yesterday as well in the bank reconciliation. So each account, if there is an error in list of balances in the individual accounts, we will correct it over there, right? Same as we studied yesterday, that if there is an error in bank statement, we'll correct it over there. If there is an error in cash book, we'll correct it over there. So there is the same concept over here. Okay, so this answer is given by that concept that we have studied. Now, when all errors have been corrected, the revised balance on the control account should agree to the revised total of the list of balances. Yes, that's correct. And this is basically meaning this equation that I have written over here. You can see this one. That control account closing balance should be equal to the individual balances closing balance. Okay. Now, due to the nature of F3 exam, you will not be asked to produce a full control account reconciliation. However, you may be asked for revised balance. Yes, so only little things are involved over here, not the full-fledged form of control account reconciliation. That's why in the exam kit as well, in just 2 or 3 minutes or 5 minutes, we'll go on to the exam kit as well. And you will see that there are just like 10 or 11 questions, because this is F3 level. This is tested on a much short scale over here. Okay, right? Now let's do this example, right? And after that, we'll take a small break. And after that, we will be starting the exam kit. Okay, now let's study this illustration. So you can see over here, Alston's payable ledger control account. Now it's saying payables ledger control account, not just the ledger. So Alston's payables control account is an integral part of the double entry system. Individual ledger account balances are listed and totaled on a monthly basis and reconciled to the control account balance. Okay, that's very nice. Now let's read what information is given over here. So firstly, individual ledger account balances at 31st March have been listed out and totaled 19766. So this is the balance of list of balances, right? Because it's written over here, individual ledger account. And again, one more point to pick over here, it's just written ledger account, not control account. So this is the individual account balance. Now, secondly, payables ledger control account. This is the full word. You can see balance at 31st March is 21832. So you can see these two are not reconciling with each other. The closing balance is not equal to one another. Now let's make the T accounts over here. Let's try to solve this. So this is the payables ledger control account. And this is the list of balances, individual accounts in short form. Okay, so for the payable control account, this balance is 21832. We'll write it as over here, 21832. Now over here, you can see it's written at 31st March. So this might seem that these are the closing balances, but actually the thing is all of this list, a long list over here, these things have not been adjusted in these accounts. So what we'll do is we'll assume these are the opening balances, because we still have to account for all of these errors, and after that tell the correct balance. Yeah. Right? So for correcting the mistakes, this will be our opening balance, and the list of balances is 19766. Right, this is the balance. Yeah, this one. Okay, so on further examination, the following errors are discovered. Let's see. The total of discount received for the month amounting to 1715 has not been entered in the control account, but has been entered in the ledger accounts, individual ledger accounts. So it's very easy to understand. If it has been entered in the individual list of balances, it has not been entered in the control account. So this error belongs to control account, right? So we will adjust this in the control account, not the individual, because individual already contains these balance. Okay, so discount, exactly, this will come on this side. So discount received of 1715 will be written over here. Okay, now second one, first is done. Second one, on listing out, an individual credit balance of 205 has been incorrectly treated as a debit. So you can see this is an error. This seems like an error in the individual account, because individual credit, it was a credit balance 205. It has been incorrectly treated as a debit. So you can see it will have been written in the list of balances on the debit side, but for correcting it, we'll make the 2 times entry, not 1 time. because if we'll do 205 one time, it's actually written over here, right? If we'll do 205
Yeah.
one time, it will make the effect 0, right? So in actual effect, what we have to do is we have to write it as 410, 410, which is the 2 times of 205. Okay, so second is also corrected in the list of balances. Now let's see the third one. A petty cash payment to a supplier amounting to 63 has been correctly treated in the control account. So control account is good to go, but no entry has been made in supplier's individual ledger account. Okay, so this was a payment to supplier, right? 63, and payment to supplier reduces the liability, right? So that means it's not written over here, will reduce the liability on debit side. This is a payment to the supplier, because this is also a liability and this is also a liability. So both treatments are same, only basically the amounts and the features differ from each other. The treatment is the same. Okay, now let's do this second last one. Purchase day book total for March has been understated by 2000. I just made one note over here. You can see if there is an error in purchase day book, this will hit which account? Payables ledger control account. Because I told you that day book, purchase day book is connected directly with which account? Payables ledger control account. So basically both the day books are equally connected with their control accounts. Okay, this is an important point to remember over here. So you can see the error is made in the purchase day book, right? And the purchases are undercast by 2000. So we'll increase the purchases in which account? In the control account. Okay, so in the control account, I'll write purchases 2000 because these were undercast. Undercast means that the purchase were not recorded. They were recorded with less amount than 2000. Okay, so this case we brought it to the normal balance. Now the last thing, contra entries with the receivable ledger amounting in total to
Sorry,
2004.
and we credit it because we debit purchase and we credit payables.
Yes, exactly. We are increasing the purchases over here, right? We're increasing the payables because it was undercast over here. Okay. Now contra entry in total of 2004 has been correctly treated in the individual ledger control accounts. So in individual, it's correct, good to go, but no entry has been made in the control account. So in the control account, no entry, that means we'll correct it in the control account. So contra entry reduces the payable, right? For reducing the payable, we'll do debit, right? So contra will be debit and the amount is 2004. Okay, right? Now let's see, hopefully the balances will be correct, and let's hope the balances are correct of both accounts. First, I'll calculate the balance of this one, control account, and then of this one. So 21832 plus 2000. So this is 23832. This is the heavier side, right? And closing balance will be over here. So if we minus from this 2004 and 1715, so the closing balance is 20113. Now let's hope for this it's equal as well. So 19766 plus 410. So this is 2176. So 2176. And if we minus from this 63, so you can see the closing balance of both is exactly the same. That means all of the calculations were successful and both of the balances are reconciled. So these were the errors that we corrected. Only you have to make sure that you revise these notes and focus on these points that I've written over here.
Okay.
Okay, so the easily you'll be done with every question. There will be not much problem in each of the question. Okay, so we have done this example and there's nothing else in this chapter, just examples and questions. You can see it's a much longer approach that they have followed over here. Step one, step two.
It's too much.
Exactly,
Yeah.
right. So what we do is that we just take a short break, right? Supplier statements we've already studied because this reconciliation only contains the control accounts, right? So we'll just take a short break of, let's say, 5-6 minutes, and after that we'll start the questions. Okay.
Okay, thank you.
Okay, let's start the questions now. And let's try to finish them as soon as possible. Okay, so as you can see over here on the screen that the control account reconciliation questions are starting from here, right? And the
Yeah.
first question I am skipping because this is, I don't know why they put it over here, because this is relating to the trial balance. This chapter we have to study tomorrow in tomorrow's class. Okay, this is from any case, it's not relating to control account. Okay, so I'm starting from this question, which is 218 over here. Okay, now which of the following possible errors could account in full for the difference? Now you can see over here, payables ledger control account showed a credit balance of 768,420 and payables ledger totaled 781,200. That means this is the payable ledger only, right? So these are the list of
Yeah.
balances, right? And this is the control account, which is which the balance is given over here. So again, it's the same thing like we did the question in yesterday's class as well. We just have to apply
Yeah.
trial and error method, that we have to test each and every option, and whichever gives the correct option, whichever makes both of the balances match, is the correct option.
Mhm.
Now, first of all, let's start it over here. So this is question 218, and this is, first of all, I'll make over here payables ledger control account, and over here this is list of balances. Okay, so the payable ledger control account is showing 768,420. So 1 second. Yes, 768,420, and list of balances, the individual balances are showing 781,200. So 781,200. Now let's start to apply each and every option in this case. So let's
Okay.
first read option A. A contra against receivables ledger debit balance of 6390 has been entered on the credit side of payable ledger control account. So it's saying that on payable ledger, remember, we always debit on
And the
payable ledger, right?
contra.
Exactly, the contra
Yeah.
we debit, but it's written on the credit side. So again, what we have to do is we have to write it on the debit side, but with the two
Yeah.
time amount over here. Because if we do one time, only the error will be made zero over here. Only the
Yeah.
effect will be zero. So we have to write it
Yeah.
two times. So 6390 into 2, this is 12,780. So 12,780. So this was the error in control account, right? It does not have any effect on list of balances. Let's see what is the balance. So 768,420 minus 12,780. Now this is not giving the correct, because the closing balance in this case is 755,640, right? But over here it's 781,200. That means option A is
Okay.
not correct over here. Okay.
Uh-huh.
Now let's apply the option B as well. This is not correct. Now option B, cash purchases. This cash purchase is a misprint. It's one time. Okay. Cash purchase of 28,400 was entered to the debit side of the payables ledger control account instead of the correct figure for discount received of 15,620. Okay. So this is very tricky. What's happening over here is that the one thing we know for sure, that the error happened in the control account, right? And cash purchases of 28,400 were entered on the debit side. So first of all, what we need to do is we need to correct the difference, right? So first it's written on debit side, and you know that cash purchase is never entered in payables control account. The only credit purchases are entered. So this is written on debit side. First we have to credit it to make it zero, right? So first of all, I'll do the error correction. I'll do credit, and this was
Sorry, but on the purchase ledger control account, there is cash paid on the debit side.
yeah, exactly, the cash paid, but actually it has done this 28,400 wrong, right? It has entered it on the debit side. We have to first finish this off, because cash purchases is not part of the payables control account, right? We have to correct the errors over here. Basically there are two things over here. First this one, and second is this discount received.
Okay,
This
so
is the,
basically we don't need to record the cash purchases because those are a mistake.
yeah, exactly. So this is not
Okay.
cash paid. Okay, this is not cash paid to supplier. This is the cash purchases. The thing that I told you, that purchase have two things. They are on cash and they are on credit. This is not the payment to suppliers. Okay, this is the cash purchase, which are written in the cash book, not in the payables control account. Okay, so we corrected this. Now secondly, instead of the correct figure for discount received of 15,620, right? So now we write the correct figure. Discount receipts were not entered in the control account. Now we write the discount received. So we finished this 28,400 because it did not belong to here. Now discount received are written on debit side, right? And the amount over here is 15,620. Now let's see the correct, if this is correct or not. 768,420 plus 28,400 and minus 15,620. Yes, this is giving us the correct option. So surprisingly, this is the correct option, 781,200. This is correct because this is the correct option. 781,200 over here as well and over here as well. Okay, right? So correct option for this will be, let me check as well. Yes, it's option B. Okay, option B. Now 219, let's check this as well. So this is much simpler than the above question. What we have to do is that what should be the closing balance on payable ledger control account when all the errors are corrected. So this account is probably made wrong, right? Some things are written on the wrong side, and I can clearly see that balance brought forward is not written here. It's written on the credit side. So what we have to do is that we have to rearrange this account. We have to write the correct amounts on the correct side. Okay. So this is question 219. One second. 219. So let's make a payables control account over here. Now opening balance, first of all, write on the correct side. So opening balance, as you can see, 318,600. Let's write it on the correct side. 318,600. Secondly, purchases, you can see these purchases and there is a note also written over here. All item relate to credit purchase. So thankfully there is no cash purchase over here. We don't have to exclude anything. So all of these purchases relate to the credit purchases. So 126,8,600 purchase are written over here. So 126,8,600, right? Okay. Now contras as well, 48,000. So contras are written on the debit side. 48,000. Right? And what else do we have? Discount received 8,200. Discount received 8,200. Right? And let's see on this side as well. Cash paid is 1,367,000. So cash paid 1,367,000. Right? And apart from the purchase returns, so for purchase return, what we do is that we credit purchase return and debit we do payable. We write it on the debit side of payables. Okay, so 41,200. This is the purchase return.
So just to remember one thing for the purchase return. So originally we debit the purchase and we credit the payables.
Yes, exactly.
So now we have to debit the payables and credit the purchase returns.
Exactly, yes. So it's the opposite entry from the purchase, actual purchase. Okay. Okay, now let's total this account and find the correct closing balance. So I think the heavier side will be, let's see which is the heavier side. 1367,000 plus 41,200 plus 48,000 and plus 8,200. So this is 1,464,400. Let's see this one as well. 1268,600 plus 318,600. So yes, this side is heavier. This is 1587,200 and 1587,200. So if we minus from this amount, minus 1464,400. So we are getting the correct option, which is we are getting the correct closing balance, which is 122,800. Let's see which is the correct option. So 122,800. This should be correct. Let's see. Yeah, this is the correct option. A option.
Can I ask you another thing?
Yeah.
You know, when there are like cash purchases, so we debit purchases and we credit cash. So for this reason, it doesn't go to the payables ledger control account.
Yes, that's right. Exactly.
Okay,
because that is not a credit transaction. That's why it's only written in the cash book.
Yeah.
Okay, now let's do this one as well. I'll do questions till 222 because these are just till I think 229. So rest of them you can try and let me know if there is any problem.
Okay.
So what difference remains between the two entities' accounting records after adjusting for these items? So this is a very different kind of question. What we have to do is that we have to follow the same principles, but what he's saying in the question is that there will be still some difference after accounting for all these three items. Okay, so we have to find that still difference that is arising. Now let's read it from here. Orden received a statement from one of its suppliers, Alta, showing a balance due of 3980. The amount due according to the payables ledger control account of Orden was only 230. So you can see the supplier is saying that you have to pay me 3980, but the customer is saying in my books it's only $230, right? So this is a difference between two records. Now let's see what is the errors that have occurred. So first of all, a check sent by Orden, a check sent by the customer for 270 has not been recorded in Alta statement. Yeah, that's right. So let's do one thing. Let's write Orden's balances over here. Let's write Alta's balances over here. I don't think there is a need for T account over here. It's just a simple plus minus question. Okay. So for Orden, the balance is 230, right? This is the opening balance. And for Alta, it is 3980. Now, a check sent by Orden for 270 has not been recorded in Alta statement, right? So Alta did not record for it. It did not account for it. Let's do it and let's minus 270. Why am I minusing? Because this is supplier balance, right? So check basically reduces the payable. We have made the payment to the supplier. So this will reduce the balance for Alta. Okay. Now, secondly, Alta has not recorded goods returned by Orden of 180. So again, Alta, the supplier, has not recorded the, what do you say, for him it would be sales return, right? So for supplier has not recorded the returns. So what Alta would do is that this $180, it would also get minus from here. Again, why is it getting minus? Because these goods were returned to Alta, right? Right? Orden returned these goods to which person? To Alta, to supplier. So these these goods should not have been made the payment. These should just be given back, right? That's right. So let me check over here as well.
Sorry, I don't understand.
Just a second. Let me check in the payables account. So yeah, you can see purchase returns. These are minus from the payables control account. You can also solve this in the T account format as well, but I'm basically making the work easier. I'm solving it over here. Let me explain you again. So you can see that this thing you understand, right? That the balance in Altas, the balance in supplier's book was 3980, right? This one. And in the customer book, Orden was saying that I only have to give you 230, not more than that, right? According to his book. Now we are just accounting for the errors that have made over here, the things that have not been recorded over here. Okay, so a check sent by Orden of 270 has not been recorded in Alta. That means Alta will have received the check. He will have received the cash payment, but Alta forgot to basically reduce the balance. The payment will reduce the balance, right? 3980 will be reduced by 270 because it's not receivable anymore of Alta.
Yeah, it's
Right?
fine. That one's
Right?
fine. Yeah.
This is payment. Okay. Now, second one, Alta has not recorded goods returned by Orden. So again, for Alta, it's a return, right? So what happens is that return also reduces the balance. Either it's receivable, either it's payable. Returns reduces the balance because these goods will, Alta will not receive money for these goods, right? So she reduces it because she has received back the goods. The customer is unhappy. So it's
Okay, so
minus to from here.
sorry, the original transaction would be, I mean, the original general ledger, in the ledger should be, oh my God.
Yeah, let me tell you over here. So what's happening is that for Alta, this is a customer, right? So for Alta, this is a receivable. So what happens is
Yeah.
for this, it is a sales return. So for sales return, we do debit sales return, right? And credit, we do receivables. So you can see the receivable balance, Alta's balance for Orden is reducing. Alta says, okay, Orden has returned me the goods. I will not charge any price to him. So that's why he's reducing, Alta is reducing the amount over here because receivable is getting credit over here.
It's just confusing because, you know, there is the supplier, so there is the payable ledger, but then there is the receivable ledger as well.
Yeah, exactly. Two things are being accounted for at the same time over here,
Yeah.
right? So, but actually, if you want to do it in T account format, you can do it in that case as well. Both of the answers will be same in both cases. Okay.
Okay.
Now let's do the last one as well. This one, Orden made a contra entry reducing the amount due to Alta by 3,200 for a balance due from Alta and Orden receivable ledger. No such entry has been made in Alta's record. So that means the contra was successfully did by Orden. He made the entry, but Alta did not make it. That means contra also reduces the balance. So there is a third minus over here as well, and that is minus 3,200, right? So this is the final balances. Let's see what still actually the balance exists. So let's do 3980 minus 270 minus 180 and minus 3,200. So still the balance in Alta is 330, much better than before. Because first Alta was saying 3980 and Orden was saying only 230. This was very unrealistic, very much balance, right? Very much difference. Now in Alta's book, it is 330 that he has to receive from Orden, only 330, and Orden is saying that it is 230. So the question is asking what difference remains still after this. So the correct will be $100, this D option, because this is 230 and this is 330. So still how much difference remains over here? $100, right? Because still Alta is demanding $100 more and Orden's record shows $100 less, right? So still there is a difference of $100,
Okay.
right? So this is the technique for the questions. Now let's do 221 as well, this one. What effect will this have on the receivables ledger control account? Okay, so a business had a receivable ledger control account that did not agree with the total of the balances on the individual receivable balances, which is receivables ledger. An investigation revealed that sales day book had been overcast by how much? $10. Okay, now I just told you one thing in the notes as well, that whenever there's an error in the sales day book, it directly hits which account? Receivable ledger control account. Only the control account, not the individual balances, right? Agreed. So actually what would have been happened over here, for correcting this, what effect will this have on the receivables ledger control account? Okay, so sales day book had been overcast by 10, right? We will have to reduce it by 10, and for
It's
reducing,
credit.
what we do? Exactly, credit receivable by how much?
Okay.
10. So this will
It's
be,
just one thing.
yes, A option.
Okay.
Yeah, it's A option. What happened? Everything fine?
Okay, yeah, no, I was thinking, you know, at least one of the exercise, you know, went well for me because
Yeah,
I was like,
yeah, exactly.
anyways, fine.
But again,
Yeah.
you see, what happens is that when you do a lot of practice, obviously BPP kit we also have to practice. That I will for sure handle in some other classes. But the more practice that we have, the more we get comfortable with all the concepts. Because if
Yeah,
we
that's
just do the concept and just say that questions we are not going to do, obviously that will make no sense over here.
yeah, it's
The
impossible.
practice
Yeah.
is the key to this. Okay. Now
Mm-mm-mm.
let's do the last one as well. 222. Which of the following reasons could account for this difference? A supplier sent Lord a statement showing a balance outstanding of 14,350. So over here, Lord is the customer and supplier is basically the payable, which is over here. Now, Lord
Yeah,
records show a balance outstanding of 14,500. So the customer's book, it is showing a payable of 14,500, but in the supplier's book, it's showing a receivable of 14,350, right? So there is a difference in between both. Now, this is a trial and error based method. Again, what I'll do is that let's see over here. This question is 222. Okay. Now over here, this is uh, one second. This is the supplier and this is Lord, which is the customer. Okay. Now first let's write the balances which are over here. So in Lord's record, it was 14,500, and in supplier's account, it was 14,350. Okay. Now
Sorry, for the supplier, this will go on the debit side.
exactly, for supplier, this is kind of like receivable because Lord is his customer, right?
Okay.
And for
For this
Lord,
reason, it's a bit confusing because, yeah, you say supplier, but for him, it's receivable.
yeah, exactly. But the thing is that the good thing over here is that there is no negative or positive balance. The only thing we have to remember is that the things which come on the opposite side are only minus, like cash paid, cash received, discounts, bad debts, right? Discounts, all of these things. Now let's see,
Yeah.
let's match these as well. So which of the following could be reasons for the difference? The supplier sent an invoice for 150, which Lord has not yet received. So this in short form basically means that supplier, by what do we mean by supplier sent an invoice? This means that supplier will have sent some kind of, like a payment advice. And
Yeah.
in other words, we can say that supplier sent an invoice. This means that a purchase might be happened. Lord might have purchased something, and this means Lord will not have recorded that purchase in his accounts. So whenever this kind of sentence is over there, you have to either call it a purchase or a sale, depending is it a customer or a supplier. So a supplier sent invoice of 150, which Lord has not yet received. So that means the purchase by Lord will have not been recorded over here, right? So this means that for Lord to record it as a purchase, it will have to increase the balance because his payable will still increase over
It
here.
will be on the credit side.
Exactly. For Lord, it will be on the credit side and it will increase the
Okay.
payable. Okay. Now let's see if the balance is correct or not. No, this is even more. You can see this is 14,000.
Yeah.
This is wrong, right? Now let's
Mention.
do option B. 1 second. Okay, so A is wrong. Now option B, supplier has allowed Lord 150 cash discount, basically the settlement discount, which is the discount received for Lord, right? So 150 cash discount, which you had omitted to enter in your ledgers. We are Lord in this case, right? So supplier,
Yeah.
1 second. Supplier has allowed Lord cash discount, which you had omitted
It's going
to
to be
enter
debited
your
for
ledger.
Lord.
I'm just confirming one thing that this U is written like you will be the supplier or the receiver. 1 second.
Yeah, now Lord for Lord is the payable, so it's
Yeah,
going to be on the payable ledger account of Lord.
supplier has
And
allowed Lord 150 cash discount, which you
yeah,
had omitted. Yeah, exactly. So in this case, we are Lord, right? We are
yeah.
the customer in this case.
Oh my
Okay.
God, yeah.
Yeah. So over here, 150 cash discount we had not entered. So this discount will be minus from our records, right? 150 will be deducted because this we will not have been deducted. The balance will not have been deducted over here. So we minus it, and this will be the correct 14,350. This is the correct. Let's see
Yeah.
if the answer is correct or not. So 222, yeah, option B is correct over here. Okay. For
Yeah.
C and D, it will be the wrong option. So B option is correct over here.
Okay.
Okay, so remaining questions you can try, and I think a lot of concepts will be clear to you. Any kind of confusion that you're having, you can surely ask, and